This week, I've been showing you what working with AI actually looks like in practice. Monday, I showed you the data. Tuesday, you learned how to spot what's actually judgment and what's just a rule that you've internalized so deeply you forgot that it was a rule. Wednesday, you learned how to say no to AI when it's wrong and why capturing the disagreement is where the real value lives. And now for the payoff. Sequoia Capital published something this month that should worry you and excite you at the same time. They drew a line between intelligence work and judgment work. Intelligence follows rules, even complex rules. Judgment requires experience, taste, instinct built over years. And here's what they concluded. Tax advisory is 80 to 90% intelligence work. Not because it's easy, because it's rule-based. Now, here's what almost every accountant will tell you right now. Oh, AI can't replace professional judgment. You've seen it in every LinkedIn thread, every comment section, where someone suggests that CAS work is changing. Always some version of the same thing. It's the profession's security blanket. But I think it's thinner than anyone wants to admit. The insight that matters comes from Nate Jones. He writes about AI and how organizations actually work. His observation cuts through all the comfort we're taking. He says what appears to be a single judgment-heavy role is almost always a composite of two things. Preparation work, stuff that's verifiable and rules-based, and a thin layer of genuine judgment on top. Now, we've bundled them together because one person doing both was organizationally efficient. The rules became invisible, and we started calling the result judgment. Now, Nate was writing about software developers and product managers. But the insight lands directly in your practice. Walk through your actual work. Transaction categorization on an ambiguous expense. Is that judgment? Or is it a decision tree you've run 500 times on similar situations? Entity structure for a new client. Judgment? Or a matrix of liability and tax and operational factors that follows a learnable pattern? Materiality thresholds, revenue recognition, deductibility decisions. Each one follows a framework you've internalized so deeply it feels like instinct. But internalized rules are still rules. And rules are exactly what AI learns. So here's the part that nobody's talking about. You weren't trained on professional judgment. You were trained on knowledge retention and rule application. Think about it. CPA exam, tax code memorization, GAAP standards, your own firm's SOPs. The entire professional development pipeline is built around learning rules and applying them to client situations. So of course you experience that application as judgment. It's the only version of expertise you were taught. The true judgment residual in an accounting practice, a CAS practice, is real. And it's more valuable than the rest of your work combined. But it's thinner than professional judgment implies. It's the conversation where you tell a business owner that their numbers are technically fine, but the trend means they're 18 months from a cash crisis. And you calibrate the delivery based on 3 years of knowing how they handle bad news. It's the instinct that something in a new client's financials is wrong before you can articulate what. We call that the sniff test. Something smells bad. It's the decision to fire a client whose books are clean, but whose behavior signals you can't yet prove. It's the advisory recommendation that costs you revenue short term because it's right for the client long term. That's the ringable deck at its most concentrated. Your name on the file, your relationship, your courage to say the hard thing. And for most practitioners, that's 10 to 15% of your actual week, because the other 85% is spent on intelligence work you've been calling judgment. And here's why this is the best news you'll hear this week. If most of your week is intelligence work disguised as judgment, that means most of your work is automatable, which means you're about to get it back. The practitioners who understand this will encode their rules through context engineering, automate the intelligence layer, and redirect their time towards the work that was always the most valuable. The advisory conversation you never had time to prepare for properly. The client relationship you've been maintaining on autopilot because you were buried in work papers. You get to be better at the thing that actually matters because you finally have time to do it. The firms that keep defending professional judgment as a blanket term will discover the distinction when a client asks why they're paying for intelligence work that an AI can replicate at a fraction of the cost. So here's your homework. Pull up your calendar from last week, the real one, not the job description version. Go hour by hour and ask one question. Was this genuine judgment? A decision under uncertainty where my experience was the only thing that got me there? Or was it intelligence? Applying rules I've learned to a situation I've seen before. Don't count the bank rec. Don't count the entity structure decision you've made 200 times. Count the moments where you genuinely didn't know the answer and your accumulated wisdom was the only thing that produced one. That's your moat. Everything else is intelligence. And intelligence is exactly what AI was built for. Now, I've built a structured audit for this, a CAS-specific prompt that walks you through your entire work week and forces the intelligence judgment classification on every activity. It's called the judgment-audit, and it's available to our newsletter subscribers at theaiaccountant.ai/judgment-audit. Now, budget a good 30 minutes. Paste it into Claude or ChatGPT and answer the questions, and you'll know exactly where your real moat lives. Go to the web address on the screen or in the notes. We'll see you tomorrow.